I'm going to be right. I'm going to be right. So remember,
How do you know you're going to be right? What are you going to be right about?
That was Craig Irvin talking about his Tesla stock price target, which is $85. And lately, in the last 12 months, he performed relatively well on Wall Street. He is in the top 1,000 almost. So maybe we shouldn't just completely dismiss what he says, although his Tesla stock, track record is not exactly great. Minus 59% per rating. It doesn't look that great. But supposedly he had some really bad news to share for Tesla stock. So let's take a look.
So let's bring in Roth Capital's Craig Irwin. $85 price target, neutral rating.
Neutral? At this rate, if Tesla stock continues going up, Tesla stock will be 3x above his price target. This is not a neutral target. I mean, if you think Tesla stock should drop by more than 50% from here, you should be telling everyone to sell Tesla stock, because Tesla stock would have to drop 62% to be at $85. I'm not saying it can happen. I actually sort of wish it does happen because I'm buying a lot more Tesla stock still. But I really can't say that Craig is neutral about Tesla stock. That's just ridiculous.
What's leading to this surge that we've seen lately, Craig?
So there's two things going on. The first, I would call out that, Tesla's obviously, a very successful company in EVs. EVs are inevitable. They created the market, high quality. It's a darling. People want to own it. So any good news, they want to buy a little bit more, and it's a positive trade. It's a momentum trade.
Not so much in my case. Every time I see Tesla stock going down, I want to buy more. Every time I see Tesla stock going up a whole lot more, I'm not as interested in buying. I still buy because the stock is just so underpriced, but I just don't want to buy it as much.
Second thing is, and I think people are misreading this, but on June 3rd, we had the announcement that they would future sales of the Model 3 rear-wheel drive vehicle, right, which is their highest volume vehicle, is going to be eligible for $7,500 in federal credits under IRA versus $3,750, just prior to that, which was on for a space of a number of weeks. Obviously better subsidy levels are good, and there's been kind of news that Panasonic wants to increase its battery manufacturing in the U.S. In the space of these recent days. But it appears there may have been the first detention of batteries coming into the U.S. under UFLPA, and that would be a major complication. And there's also,
what does that mean?
So December 2021, UFLPA was passed. It handles the sensitive issue of forced labor in product content and certain Chinese regions. So it's the policy to exclude all products made with forced labor. And CBP only did their first enforcement in June of 22 for solar, right? My colleague Phil Shen did some really impeccable work around this. This looks like we now probably have our first enforcement action for batteries. And sort of the person raising the flag, his name is Richard Mujica. He was intimately involved in the first Chinese OEM to have this issue for U.S. customers. So, there's going to be a lot of changes. I don't know if it's good. I don't think this is. I think this
Craig,
is bad.
If for some reason this is going to be a problem, then guess what? It's going to be a bigger problem for a lot of these other automakers than for Tesla, really. Tesla has proven time and time again that it is able to navigate very complex and difficult supply chain conditions, while other OEMs, not really. At least not as well as Tesla, nowhere near as well as Tesla. So even let's say Craig is right and this becomes a huge issue somehow, while it could hurt Tesla stock in the short term, in the long term, this would actually be advantageous because Tesla would keep increasing its market share in the market and Tesla would keep going forward while other automakers would stagnate a little bit. In the long term, this would be a win for Tesla. In the short term, Probably not. I did a bit of Googling and this is what I found. UFLPA basically is forced labor, and it's an act that was signed by President Joe Biden. Let's say this somehow becomes an issue for Tesla. And imagine that you manage a battery company. Who would you like to work with? A legacy OEM, which you're not really that sure about. Is this company really going to make a lot of electric cars? Will people even want to buy electric cars from this company? Even if these companies make cheap EVs, like for example, GM made this car. GM only sold 38,000 of these last year, which is roughly how many EVs Tesla sells per week. So if you are a battery company, do you want GM as a customer or do you want Tesla as a customer? Of course you want Tesla as a customer. So if there's some sort of battery supply constraint, then all of the battery companies, I think they will prioritize Tesla instead of other companies.
You know, Craig, listen, when you come on with us, I always respect your obstinacy, but...
I respect you, but are the words you don't really want to hear because they think you are crazy. And Craig does have a rather crazy take on Tesla stock. So it does make sense that David would say that.
You know, $85 price target still. I mean, what's got to happen for you to be right here?
I'm going to be right. I'm going to be right. So remember,
how do you know you're going to be right? What are you going to be right about? Tell me.
There's about 100 EVs that are coming to market this year, 100 new EV models.
He left out a very important detail. None of these vehicles are going to make any profits for a long time.
And they're going to pressure Tesla significantly to the back end of the year, just like we saw last year, right?
Pressure Tesla? Really? Well, only Ford discloses how much profit they make from their EV business. And by that, I mean how much money they lose in the EV business. And it's a lot. And it's getting worse. At least the last quarter it did. Ford is now at 102% negative margin. That means if they sell a vehicle for $60,000, not only do they not break even, they actually lose $60,000. The inventory is still super high for the Mach-E, and it's one of the better EVs if you want to get something else other than a Tesla. So while maybe this could somehow put some short-term pressure on Tesla stock long-term, yeah, I don't think there's much here.
You know, Tesla's valued at a massive premium to Toyota, sells a tiny fraction of the vehicles. They don't have anything that Toyota doesn't already have, right? So what they have is, you know, a focus exclusively on EVs. And they have a story around robo-taxis.
He just literally named two things that Tesla has and Toyota does not. Some of these YouTube shorts are pretty funny, but I gotta say, watching Craig, I think is funnier than watching some of these YouTube shorts.
But that story is nothing but a story. We're not seeing any taxis anytime soon. You know, other people could take as aggressive positions in the technology. You know, I, like many, just find it a little bit scary when you have these apparitions in front of you causing false braking, you know, in the FSD systems. So, you know, it's a story stock. It's a story stock. People love.
But the story's been out there for a real
time. Sadly, they cut the clip right here, and I don't know what Craig said later. And maybe that's actually helping him because what he was saying earlier did not really make sense. So this saves him from further embarrassment. So I'm happy for him. And you have to see this Morgan Stanley note, which really highlights one of the key Tesla advantages over the legacy OEMs. Adam Jonas writes, the vehicle I bought happens to be in short supply right now. According to Motor Intelligence data from May, dealers had just a 34-day supply across the US, but in the tri-state area, I can tell you it's far tighter, particularly in the more desirable higher-end trim levels. I must have considered at least a dozen dealers with the help of the manufacturer's online shopping tools, which were really helpful in finding franchise dealers in my area. With Tesla, you don't need to do that. You don't need to call many people, ask for this and that. You just go online and this is what it is. Very simple. For the spec I wanted, most dealers I looked at were showing their in-stock units with a line drawn through the MSRP, either showing an added dealer adjustment of $4,000 or $5,000 over sticker on the site, or with an asterisk saying ask dealer for more information, which I learned means they are charging above sticker. I was about to give up and place a factory order at MSRP price, which most dealers told me could be an 8 to 12 week wait if everything worked right, until I found a dealer that had a fair amount of units on the ground with the website. They had almost the exact spec I was searching for, showing the dealer price equal to the MSRP. No dealer adjustment. So I called the dealer, and the coordinator in the new car department confirmed the VIN of a vehicle I was interested in, verifying that this model was indeed selling for MSRP and not over. I booked an appointment, got my Sienna trade-in washed, and drove 90 minutes to the store, but not before I took a screenshot of the dealer price as shown on the website on my phone. I have a feeling this was a very good idea. So here's how it went down, he writes. I was greeted by a friendly sales professional who took me upstairs to a prep garage where he pointed to the brand new SUV saying, "So here's your new truck." I turned to him and said, "Isn't she beautiful? Hey, I just wanted to confirm that there's no dealer adjustment on this vehicle." He looked at me and said, "You gotta be kidding. This model's in super short supply. We asked for thousands above MSRP in this market." Exasperated, I said, "But I called and confirmed with your coordinator you were asking for MSRP before driving down here." To which he responded, "Who told you that? No way. I'd normally start someone at least 3,000 above sticker on this vehicle. You should do your research, buddy." So I took a deep breath and said very slowly, "You know, I thought this might be a problem," and handed him my phone with the screenshot clearly showing the dealer price equaled to MSRP for this exact stock number. He looked down at the phone and with a straight face said, "Okay, then I guess that's the price." I asked him, "Look, I get it. You're just doing your job, but is this how this process really works?" From that point on, I was never treated better by a dealer. The rest of the process went really smoothly and professionally, but I reflect on that experience and wondered, what if I didn't take that screenshot? Tesla's sales process is a competitive advantage. While a lot of attention this year has been paid to Tesla's frequently changing prices within one region, all consumers pay the same price for the vehicle, and that works in Tesla's favor. If you bought a vehicle from a car dealer and you had a bad experience, and then you walk into a Tesla showroom and you buy the vehicle, you're probably coming back. And in this video, I talk about Tesla starting to advertise. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.